Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita, and we continue our pre-budget series to try and break down tax law for you. Of course, expectations to try and simplify tax regime have been on since the last 10 years of the NDA government as well as the BJP government. And therefore, what more can the government do likely in this budget to kickstart their third term? And Modi 3.0 will be on the radar. And to join us and give us perspective on this conversation, I have with me Mr. Punit Shah, who is a partner with Dhruva Advisors, to try and break this down further. First off, welcome to NDTV Profit, and thanks for being with us live. So I just first off want to try and break down old regime versus new regime, right? Do you believe that that can continue to coexist in Modi 3.0, and when do you believe would be the right time to phase out the old regime, if at all?
I think the new regime was introduced a few years back, maybe around 3-4 years back. We are still coming to grips with the entire situation. The way they have made it is the new regime is a default regime. So today every individual gets into new regime by default unless you opt for the old regime. Right? People are used to old regime, people are used to deductions. The new regime is without any deductions. And there are very significant deductions such as HRA, LTA, Section 80C, 80D deductions, etc. So people are still coming to grips with the situation that I would opt for the new regime without any deduction, and they are still looking at the pros and cons, they are still looking at the cost and benefit analysis, and then they would decide whether they would want to be in the new regime or not. It also depends on at what stage of income slab you are on, right? At particular point of time, it may make sense for you to opt for the new regime. At some point of time, with all the deductions, it may make sense for you to continue with the old regime.
Right.
So, to my mind, I think it will continue for a few more years. I think the government is looking at the number of people who are opting for the new regime, those who are opting for the old regime, and I think they will take a call in due course to see whether they want to scrap old regime at all. My view, I don't think it is prudent to do that, because it would discourage some of the important investment linked incentives such as provident fund, insurance, etc. So to my mind, it would coexist. It does coexist, and as consultants, we have not seen any significant issues around this. I mean, there is not much confusion between both the regimes.
Right, so but therefore, does this not add to the complexity of an already very complex tax structure?
Absolutely. When it came, we were all struggling as to what do we advise our clients. There's already one regime, plethora of deductions, exemptions, etc. Now this claims to be a simpler regime, less deductions, less exemptions, lesser tax rate, and therefore more benefit, etc. But yes, it does add to the complexity. In fact, if you look at one is the people who are at a slab rate of 3 lakhs, 4 lakhs, 5 lakhs, 7 lakhs, etc., where it makes some difference, 1 lakh odd of taxes. But if you go to a much higher level, say HNIs or ultra HNIs, and go to an income level of say 10 crores, there could be a difference of 40 lakh rupees there, mainly because of surcharge difference, right? The surcharge is same for several levels, up to 1 crore, 2 crore or 5 crore, but above 5 crore, the surcharge is 37% for the old regime and 25% only for the new regime. It can make tremendous difference if you are at a much higher level, say like 5 crore plus, or it makes some difference if you are at much lower level, which is like a couple of lakhs in that sense. So yeah, that's how it works.
And therefore, the real question would lie somewhere between 10 to 20 lakhs, where a large bulk of our viewers may find it relevant, as well as a large bulk of India also resides, because clearly the conflict does not lie in the 5 crore plus to opt for the new versus the old. The conflict lies in the sub 20 lakh bracket and above the 7 or 8 lakh bracket. And therefore, if one were to opt for HRA as well as some of the basic deductions, should one opt therefore for the old tax regime? Is that what you're hinting towards?
It would also depend on the quantum of the allowances or deductions which you are claiming. So you have, as I articulated, you have HRA, you have LTA, you have section 80C, 80D, 80G, you have interest on house property, borrowings
Yes.
for house property, which is
Yes.
2 lakhs.
Yes.
Even that is not allowed under new regime, right? So to my mind, it would depend on the individual circumstances of people as to what kind of deductions they are claiming, what kind of rent they are paying, what kind of interest they are paying, and accordingly they are well advised to do their calculation and see whether it makes sense for them for the old regime or new regime. There is a strange rule where if you have a income from business, individual have a business from income from business, then you can opt for old regime only once. So default regime is new. You can withdraw from the new regime, go to old regime, but you can do it only once.
Okay.
So that's a very strange rule. You can't go back to new regime.
Okay.
But for individuals who do not have business income, they can opt for old or new regime every year in that sense. So that's a good flexibility which has been given. So maybe individuals would actually do calculations every year, look at their situations and then opt for either old or new regime. As I said, difference is not very large at that level. It's somewhere it is below 1 lakh in terms of tax impact. So if your deductions are more than 2 odd lakhs or 3 lakhs odd, then I'm sure it will make sense for you to go for old regime.
Right.
Because the tax impact is, let's say, 20% of 4 lakhs. Whatever that number is, say 40,000, whatever,
Right.
that would bridge that gap between old regime and new regime.
Sure.
So higher the deduction, it would make sense for you to go for the old regime, or else you opt for the new regime.
Sure. So my key takeaway from this for viewer simplicity would be that if you have an income between 8 to 20 lakhs and you would have deductions between the 2 to 3 lakh kind of range or greater, then you ought to start looking very actively at the old regime.
Absolutely.
And it's something you will have to opt for, because the default regime is now the new regime. If you don't opt for the old regime, you will automatically fall under the new regime. But what I really want to deal with is the first part of your answer, sir, was with regard to PGBP, which is for simplicity business income, where you would, where as a taxpayer you would be earning business income. What then? So once you opt for the old regime, you have to stick with the old regime across assessment years or across financial years.
That's
and
correct.
You can only opt for the new regime once. Thereafter, you cannot go back to the old regime.
That's correct.
So can you break that down for us? Can you?
Yeah. So that's exactly, the law is exactly what you mentioned is, and it's a bit strange. I'm sure there is some logic behind it, but that's how the law is. You can opt out of the new regime and go to old regime only once. Then you can't go back to the new regime. The withdrawal is permitted only once if you have business income.
Sure.
I'm sure legislature in its wisdom has decided this law, but it permits a lot of flexibility to a person who does not have business income, and therefore you could decide every year in terms of whether you want to be in old regime or new regime. That's how it works.
Understood.
Yeah.
And sir, for those who are opting for this shift from new to old, new being the default now, of course there are various factors, but have you encountered or have you thought of a situation where it would actually be detrimental to someone who's opting for the new regime and he would prefer holding back to the old regime just because in one particular financial year there is a one-off? Because this is such a unique case where you can't go back and forth between old and new.
Yes, it could be detrimental for sure. So you have to make that decision very wisely, especially for the business income earning individuals, because you can't go back clearly. So yeah, it can prove to be quite detrimental. So you need to take a long-term view in terms of all your deductions, Again, some of these deductions like HRA or LTA or even the ATC or ATD kind of deductions are typically you can take a long-term view. It's not every year deduction. You would have a policy, you have a PF, you have a housing loan which could run for 10 to 15 years, right? So you can take such a long-term view and then decide which regime to go for. I just want to add one more thing. There seems to be a lot of noise around increasing some of these deductions. Clearly, I think we should talk about it. Some of these deductions the numbers are fixed 5 years ago, right? So standard deduction, for example, which is possible in both the regimes. Interest on housing loan, again, for 5 years, 2 lakh rupees. ATC deduction, 1.5 lakhs, again, 5 years back. So there seems to be a lot of demand to increase some of these deductions. I'm sure inflation, considering inflations, etc., I'm sure there will be some movement towards that. There is a demand for increasing slab rate as well. Today it is like up to 2.5 lakhs, no tax in the old regime, up to 3 lakhs, no tax in the new regime. Clearly there is a demand to increase it to 5 lakhs, right? And no tax up to that. Anyway, you have that rebate under section 87A up to 5 lakhs and up to 7 lakhs in respective regimes. But maybe they can consider increasing the slabs to 5 and 7 lakhs and do away with a rebate. So those are some of the demands. Let's see what comes.
Yeah, so those are excellent views, sir, because that will simplify the structure as well, and it will give in to the demand as well of. But what are the other populist measures? Because you know, one of the big expectations post at least the Modi 3.0 election was that there will be a slew of populist measures which will come through. And likely this is the first big event post the elections. So in your view, of course, two things which you've covered very well. One is with regard to some of the deductions, the limits with regard to, say, ATC, 1,50,000, as well as the slab rates. But what are the other big populist measures in your view from an individual taxation perspective that the government could consider?
So one is, two we discussed. One is the slab rates. Clearly, I can see that there could be some progress there. Deductions, clearly there, I am hopeful standard deduction or whatever could go up. Two more things I can think of. One is the surcharge we spoke about.
Sure.
37% surcharge is huge. It's a killer.
Yes.
It used to be 25%. It has become 37%. We have seen cases where individuals are now looking at actively trying to avoid taxes only because surcharge is so high. HNIs, 37%. And it's no longer tax planning. You are getting into the realm of tax avoidance, whatever. So I think government should relook at 37% surcharge. It's too high to my mind. Maybe there is a case to reduce from 37% to 25% surcharge. So that's one I can think of, but that's for HNIs and ultra HNIs. Second, there is a lot of discussions around inheritance tax and wealth tax being reintroduced, or rather inheritance tax is nothing but estate duty. Wealth tax used to be there years back. I can see a lot of discussions in the press and media, etc., to see whether there is super rich tax, reintroduce, inequality, proper distribution of wealth, income, etc. So there seems to be some movement, discussion at least around reintroduction of some of those measures. Not sure whether it will actually happen or not. I think every government has their manifesto where they have pronounced or announced whether they are backing some of these measures at all. But these two are interesting space to watch out for.
And do you believe that those will be introduced?
I'm not sure. We talked about populist measure. Now, something which is populist for one class of individuals may not be populist for another class of individuals. Sure. So it's a divide between super rich and middle class or lower middle class. So I feel it's too early for the government to introduce some of those measures. That's
okay, too early it seems, and fairly so, because some of the assets within the wealth, the wealth tax regime are not just owned by the super rich, they will be owned by the middle class as well. And
that's true. That's true.
And even some of the inheritance tax proposals, if at all that were to materialize, of course, will also be applicable to some of the middle class. So
the way it works is that typically those taxes are levied only beyond a particular limit, which is like 1 crore, 5 crores, whatever. So hopefully should not impact middle class or lower middle class individuals.
Sure, excellent. So any last thoughts with regard to ironing out some of these and simplifying tax regime from an overall standpoint? Just to kind of cover all bases, anything in your mind that the government must do in this budget to kind of simplify the tax structure for individuals?
Okay. We talked about new regime, old regime, we talked about deductions, exemptions, we talked about slabs, etc. So there is some scope there which can be done clearly, but that's more liberalization or rather simplification. But one area I can think of is the flow of information between the individuals and the tax office in the form of specified financial transactions where companies have to report some of the transactions to the tax office, then tax office fills it up and puts it on the portal for the individuals, form 26AS, etc.
Yes.
The details of TDS, details of advance tax, etc. and details of capital gains, interest, dividend.
Now you have annual information statement
AIS,
also coming
for example, right? There I can see a lot of scope for improvement and simplification, availability of information on a timely basis in the form of 26AS. There's a lot of scope for reconciliation, you give feedback, department corrects it, etc. So timely updation of those documents for the individuals to file their returns in a timely basis is something which tax office can, revenue authorities can actively look at.
Sure. Okay. So thank you so much. It's been a great interaction. Plenty of takeaways. And coincidentally, we also have Sensex at record highs as we speak. So I'm going to try and quickly cover that. So we have Sensex, which has hit a record high. Let's quickly pull up, if we can, the Nifty constituents, as well as just in terms of which ones are contributing the most. Oh, there you go. We're seeing a bit of a spike there on the Sensex index, at least 0.3% higher. You have SBI, L&T on the bottom of your screen. You can see some of those, but HDFC Bank is the key one there. 60 points to the Nifty and likely a very similar or proportionately similar number on the Sensex, which is essentially what's driving. But look at private sector banks, because those ones are the ones which are driving markets today, along with Larsen & Toubro. And essentially, even the Nifty just about 13 points away from life highs. So it's a good time to be in markets. Markets continue to hit life highs, positives there. But it's been a great interaction with Mr. Punit Shah, and to try and break down individual taxation with him. Thank you so much, sir.
Thank you.
With that, we'll slip into a very short break. More on the other side. Stay tuned to NDTV Profit.